Hello, Greg here from Master Trader. I have been answering student emails and posting them here at YouTube for the education of everyone. And so, what I do majority of times when someone asks, they send me a chart, ask a question about a concept, and I record a chart and I send them my response so that they have it to review as much as they want. And so I'm posting it here. So the question was, and this was on a chart of Amgen, and the question was, they highlighted two bars, and the two bars that they highlighted were right down here. These two bars, and then this wide range bar up. And their question was, the bars that they highlighted, are they in the proper location to be considered money bars? Well, what they're pointing to, the location is one thing, but it's not even a money bar, as I've defined them. The location, being in an area of a prior pivot low, is a good location because once it comes down into an area that a pivot was created, new support, I know that there's going to be buyers there. Now, that ripped right back up with a wide range bar. So what that tells me is that while this even came down with this relatively large red bar, enough buyers showed up there to drive it right back up again. So that shows me that there's strong demand to do that. Now, it kind of sets up a little continuation pattern of, it's really not a 1, 2, 3 because it didn't break out, but it's one in which if we were to see this at the time, right away we'd have been thinking, hey, this is a great setup for a put spread, to sell a spread down below here because the pattern suggests it's not going to go down. So as an income trade, and especially if it would expire in, say, 5 days or 10 days or less, with a credit spread down below here somewhere, that would be a good trade. As a long trade, looking for it to go higher, it's not great. There's resistance right here. Now, as this moved up, this bar right here is close to what I'd call a money bar. It's a correction bar, and that bar suggests it's going to go higher because over here, in this area, after this reaction, we know that there's strong demand. And if there's strong demand, it's only there for one reason. There's a belief that it's going to go higher. Now, if prices have already broken out, well, that's a greater probability that it's going to go higher because there's a lack of resistance. This bar here, this correction bar, was somewhat of a reaction to this resistance right here. It didn't quite get up there. But when you get a correction bar that breaks the lows and it springs back up, that's a good bar in combination with what preceded it to suggest prices are going to go higher. Now, what I'm going to show you is what I've defined exactly as a money bar setup. And it's where it happens after the beginning of a move. It's a correction bar. And so here's a wide range bar. That suggests it's going to go higher. Now, we're not looking at what's over here to the left. I'm just a different example on the left side here. But this is what I've coined as a money bar because once it forms a wide range bar, that's a power bar. It's going to go higher. It becomes a 1, 2, 3 type of a pattern because you've got the inside bar, and then it breaks the low of the inside bar and it comes right back up again. So the buy is over the high of the bottoming tail bar. We already assume it's going to take out this high and keep going higher with a stop down below the bottoming tail bar. The one on the left, it starts and you get a 1, 2, 3 type of a pattern. Again, let's assume that it cleared resistance. We can't say what's to the left. Let's assume that it's going to go up, and that's our entry, the 1, 2, 3 bar. After it runs up, it's going to consolidate, and then we get another correction bar. And as long as there's what I call a void above, meaning there's a lack of price resistance to the left, we assume that that correction bar is going to lead to higher prices. Why? Because there's strong demand. And it broke the low, and it comes back up, gives us an entry point above here, and we'd give it a little bit of a wider stop than just the bottoming tail bar, but that's the idea of continuation patterns. So just quickly let me show you, let's see if we can find something that maybe shows us the concept right here and now. So what I did was I looked at the scan here, bottoming tail bars, BT dailies. And I could change this to any time frame I want, but I have it set on daily. And here's a wide range bar. It's not a 1, 2, 3. It tries to go up. It's not textbook. It tries to go up and it got rejected. And last week it went down, came back up again. Today it took out the low of both of those bars and it came back up. All of these highs are equal here. So this is a pretty good example that if it takes out those highs, it should go up. Now, does it have a clean, beautiful void above? Not exactly, but it went down, it bottomed out. Notice the big red bar there, the big wide range bar up, the consolidation at this resistance. It's not a great setup, but it's a pretty darn good setup for a short-term move, especially if the broader markets would continue to go higher. Now, the broader markets today, coming back from the holiday and up at resistance, it's not supportive of having a major move, but let's see what tomorrow brings. The Qs, the tech held up relatively well today. Tech here, XLF, it's at resistance. It's not a money bar setup. It's not even a correction bar. It didn't take out lows in any significant way. But if it can take out this high, maybe things go up a little bit further. So again, we combine what's happening in the broader markets. We look at individual sectors, and the S&Ps here look like they could go down a little bit more. And so that ON is in the semiconductors. We know it's a tech, and semiconductors don't look great. So while I'm showing you one concept called a money bar setup and how that is set up, we also have to look at other concepts, what's happening in the broader markets, what's happening in a particular sector, and then apply that as well as multiple time frames. We had a big discussion about that in the green room today, but get a trial to the green room, check it out. Our advisory letter has all of these setups that we use for recommendations for swing trades and options trades, so you could learn a lot there. But I hope you enjoyed this. If you had any questions, email me, greg@mastertrader.com.